Salam everybody, this is Investor Sheikh back at it again with another video. I hope everyone's having a good Ramadan. We're almost to the finish line. Now, today's Halal stock pick is a unique one, as I will be talking about an ETF instead of the usual individual stocks. Now, if you watched my previous video, I talked about ETFs and how it would be a good idea to invest in an ETF if you're new to investing or you're someone who is concerned about investing in a single company, as it is a more risky option investing in individual stocks. By investing in an ETF, it allows you to spread your money across a variety of companies. So you get a little bit of this, a little bit of that, and so on. And the ETF that I'll be talking about is the SPUS S&P 500 Sharia ETF, ticker symbol SPUS. Stock price is at $27.63. Now, this is a relatively new ETF, as it has been trading for a little over 2 years. It started off at $20 a share, and then the big sell-off of March 2020 has caused it to go as low as $15. But since then, it has been showing a general uptrend. So you see it has slow and gradual growth. This is expected of an ETF. It will have ups and downs in the short term due to the short-term volatility, but in the long term, you do see a general uptrend. So it'll be a while before it reaches $40 or $50. So a description of the ETF is: the investment seeks to track the performance before fees and expenses of the S&P 500 Sharia Industry Exclusions Index. The index is composed of the constituents of the S&P 500 Sharia Index, other than those from the following sub-industries: aerospace and defense, financial exchanges and data processing and outsourced services. Basically, it's excluding those companies in those sectors. The manager of this ETF attempts to invest all or substantially all of its assets in the component securities that make up the index. Under normal circumstances, at least 80% of the fund's total assets will be invested in the component securities of the index. It is non-diversified. So this ETF is actively managed, meaning that somebody is using the money that's coming from those purchasing this ETF and buying those individual stocks that make up the ETF. So as you see here, this is the top holdings of the ETF. It does compose primarily of Apple and Microsoft stock, as they make up at least 22% of the ETF. Apple is at 11.75 and Microsoft is at 10.63. Then it's followed by Facebook, Google, Tesla, Johnson & Johnson, Nvidia, Procter & Gamble, which we talked about last week, and Home Depot. These are the top 10 holdings of the ETF, meaning that if you purchase a share of SPUS, you get a little bit of Apple, a little bit of Microsoft, Tesla, Google, etc. So instead of buying those individual stocks, you get to have a little bit of each with this ETF. So, some information about this ETF is that it has a dividend yield of 1.24%, so it does pay a dividend. So you will be earning passive income in addition to the long-term capital gain growth that you'll see if you were to hold this stock for 5 or 10 years. Now, one thing to keep in mind is that since this is an actively managed ETF, it does have an expense ratio of 0.49%, which means that for every $1,000 of this ETF you purchase, you will pay $49 a year in fees. Now, this fee is going to go toward the management team that is responsible for managing the portfolio. They tend to rebalance the portfolio pretty often. So as they will add more shares of a certain stock depending on how well it's performing. So you do pay a fee. It's not substantial compared to ARK Invest ETFs, which tend to have an expense ratio of 0.75%. So you do pay more with the ARK Invest ETFs. But 0.49% is a lot higher than the typical low-cost passive index funds, such as VTI, which tracks the market and is not actively managed. So that's something to keep in mind. Since somebody is in charge of purchasing and selling stocks in this ETF, you're essentially paying for their services to do the work for you. Now, if you don't want to do that, you do have the option of purchasing the shares yourself and trying to match up the ratio to them. But if you don't have the funds to build your own portfolio matching this ETF, it doesn't hurt to pay the fee to have somebody do the work for you while you're still experiencing long-term growth. And then another thing to keep in mind is that the dividend yield is higher than the expense ratio, so you do come out on top. Now, let's take a look at the other holdings, since Yahoo Finance only shows the top 10 holdings. So in addition to the 10 stocks that it holds, it also has Adobe, Intel, Salesforce, Pfizer, Cisco Systems, Abbott Laboratory, Coca-Cola Company, Chevron, PepsiCo, Merck & Company, Thermo Fisher Scientific, Medtronic, Texas Instruments, Nike, and Danaher. So a few of these I have made a video on in the past, so I suggest you check them out. But nonetheless, by purchasing SPUS ETF shares, you are getting a little bit of each company, which is pretty nice. Now, personally, I don't really own shares of Google or Home Depot, but it is nice getting a little bit of exposure in these companies via the SPUS ETF. With that being said, I'm not a financial advisor, so please do not buy this ETF just because I'm talking about it. I suggest you look into this stock further and do your research. And if you like what you see and you like the exposure of the companies that you'll get into by buying this stock, then it wouldn't hurt to build a position. Now, I do plan on adding some shares of SPUS in my Roth IRA to take advantage of this long-term growth while also getting exposure in some of these companies. This is Investor Sheikh checking out.